robots. Because it just kind of chops sideways. Let me illustrate this, then we'll talk about questions. From 5 to 8, there's absolutely nothing going on in the market. All exchanges are closed. From 8 to 8:30 p.m., there's a thing called gap time. All times are Eastern New York. Gap time is when the market maker comes on duty and he gets his instructions for the day from the powers that be of what he's supposed to do. Man, I wrote 8 p.m. twice. It's 8:30, sorry. 8:30 p.m. 8:30. All right. The market opens, the Asian session opens at 8:30. Okay, what takes place in gap time? Hey, what's going on today? I got long holders trapped high on the aggregate at 129.27. I need you to hit the stops, pick up some pending orders over there, and I want price down at 125.35 by the end of the day, by the end of your session. Will do, got it. Hey, I got $600 million in open float. We're a little out of shape with our equity. I need you to hit the stops and even some of that out. I need you to get it down to about $400 million in open float because that we can handle that. Our equity pool's getting out of whack. It's not 8 p.m. in Tokyo. It's the morning over there. I don't really know how the times convert over there. It's 8 p.m. New York City to 8:30. Market maker gets his instructions. He goes to work. Now, he also is told that he has to continue to accumulate. Collect the contracts, balance out the books, whatever it is. Most of the time, the accumulation phase goes through the Asian session. In a perfect world, the accumulation happens all through Asia, breaks out London, starts the move, continues, reverses US, and goes back into consolidation. But if it was that simple, there's a lot of smart people out here. Craig almost figured it out. People would figure it out. So with that being said, they change the session times when the moves occur to keep people confused and unable to figure it out. That's all it is. By switching times, they throw people off. Nuclear reactor blew up, let's move the end pairs today. During the Asian session. Duh. Nothing going on, let's hold it and let's not move it till the US. Okay? They will hold the swing through the session till about 1 to 2 a.m. Okay? Now here's what happens. At the start of the London session, the first move is to pick up the pendings and destroy the breakout traders. Some of you guys have heard of the Frankfurt Power Hour. There's no such thing as bullshit. What they do is they widen the swing early, Frankfurt time, and pick up the pending orders, validate any fib patterns, and they take those guys out. In an ideal world, between 3 and 4 a.m., 3:30 being ideal. Between 3 and 4 a.m., they make an aggressive move, in this example, towards the high and extend the initial high of the day. That move is comprised of 3 individual pushes. 1, 2, 3. Remember I told you about the number 3 in the presentation? 3 is a psychological barrier for human behavior. You've been saying it all your life. Things come in three strikes, you're out. If someone dies, they go, oh, one more. Right, it comes in threes. You've heard that crap all your life. We're programmed as people psychologically to procrastinate and to hesitate. The 3 pushes ensures the market maker that you will in fact chase that trade. The 3 makes you do things based on your human psychology, fear and greed and things that drive the market, ensures that you will take the wrong position. It's dirty, but that's why they do it, because it works. Here's what happens. You're standing there, and you see the thing push right out. It pulls back. You go, maybe it's going long today. They hit it again. Bam. They extend the high again. You go, damn, look at Euro. It's going up today. I'm missing it. They hit it a third time. The third time makes you realize that you're missing the trade and you want to get on, and you buy at the worst possible point in this scenario. You place your orders in here. Okay? This action goes on around 2:30, 2:45, 3 o'clock. When they get those orders hot, validated, and piled on, they quickly pull off 20 to 25 pips. And I'll go over this again. This is a very important part of the business. Pay attention. They'll pull back quickly. They repeat the level but fail to break it. They fail to take out the high of the day. They might throw a wick above it. That's acceptable. The wick grabs the orders. They will then pull away and go into consolidation. They shift the zone away from all this work in here. The London session starts at 3:30 p.m. Eastern Time, New York. The Asian session ends at 3 a.m. Steve, that doesn't line up. The gap time from 3 to 3:30 is when the Asian market maker discusses his moves with the London guy that's coming on duty now. The London guy receives his marching orders from what Asia was able to accomplish or not accomplish, and what needs to happen to keep the bank liquid and making money. When they pull away and go into consolidation, the traders are jammed up that are traded long above here. Higher level long holders are jammed. They will then make 3 levels of drop. Okay? Ask me to repeat the 3 a.m. time, no problem. The changeover, the Asian session ends at 3 a.m. The London session begins at 3:30 a.m. New York time, Eastern Daylight Time, whatever the hell we're on right now. Okay? The gap time is from 3 to 3:30. From 3 to 3:30, you might see a stop trigger. You might see them put in the second leg. Or start making the second leg. There's a trade that we call the Brinks trade, and I'll illustrate the rules for you, but I want you to understand. The Brinks trade is when the second leg of the M or W is formed on the 345 candle. Okay, write it down. The Brinks trade is when the second leg, M or W, could be a V bottom too, but for now let's just go M or W, is formed on the 345 candle. What the hell are you talking about, Steve? False move, end of session. Price rises as we go into the end of the session in Asia. It makes a false move, session beginning, issues a spike to the high, and will close on a hammer at 345. False move, session beginning. The reason that we call this a Brinks trade is because we're so certain it will pay out, you can back up the Brinks truck on it. There are 2 Brinks trades a day. I will illustrate them for you here. All pairs, any pair. If you get second leg M or W issues a hammer at 345, lights out. Back up the Brinks truck. You will get paid. The 3 levels of drop will form during the night of about 6 to 8 hours. Look, I don't know your time zone converted on timezones.com, man. I don't know. New York time, if you're in California, -3. If you're in Hawaii, -5. Figure it out. Paul, nice to see you. Write it down, buddy, and figure it out over there in Texas. I don't know what the hell's going on over there. All right. Need to come over there and eat some ribs with you, buddy. I miss you. Hope you're doing all right. Okay. When you get 3 levels of drop, most of the time, because you have an extended move, you will get the W formation on the opposite end of the chart, and you will get the retracement back into the range. I mean the 345 candle that paints from 330 to 345 and locks. Okay? So now, the Brinks trade comes in, second leg M or W, when the candle paints from 330 to 345 and is a hammer spike. I'm going to talk about the rules and more stuff. We'll go over it. Just want you to see it right now. Now, let's talk about ADR. If you have an ADR on a pair, which is average daily range, average daily movement, sorry about my drawing. Okay, now, a pair moves 100 pips, right? I just told you there's 3 levels of drop or rise. In this example, there's 3 levels of drop. What's 100 divided by 3 levels? To make it easy, let's say 33. I know it's 33.333, whatever. It's 33. Each level will contain approximately 33 pips. Right? Understand? Each level contains about 33 pips. So you have a burst or move of 33 pips in each level before a retracement or consolidation is seen. They'll hold it a little bit. Mid-session, they'll consolidate. They'll burst 33 pips again. Consolidate around the 8 o'clock hour a.m. Then they will burst again 33 pips to finish out the session. Understand? So if a pair is 150 ADR, like the pound, or 200, take 150 divided by 3, you're going to get 50 pip bursts of price movement. To give you the 3 levels. This is universal in every single pair, in every platform, with every dealer. And I always trade on the 15-minute chart. Just don't worry about charts right now. Just get this illustration down. Pay attention to this. This is the whole business right here. Don't worry about it, Mac. We'll get to it, buddy. Hang in there. Nice to see you. Okay. If a pair has an ADR of 150 pips, then you will get 50 pip price bursts. Then they will do the same thing. They will go into consolidation. They will trap short, hit the stop, show one more push down, pull back. Second leg will form. At 9:30, I'm sorry, at 9 o'clock, over here, this drawing's getting out of control. I should have did smaller writing. At 9 a.m. New York, the London session comes to a close. The New York market maker comes to work, and he talks to the London guy. Gap time, 9 to 9:30. At 9:30, the U.S. equities market opens. The Forex is lined up with the U.S. equities open to create the moves based on news releases and whatever else is going on in the equities market. If you are issued second leg W in this example, a hammer spike to the bottom at 9:45 candle close, 15-minute chart. Coke, I'll cover the ADR. Relax. If a 9:45 a hammer is issued, Brinks trade number 2. The reversal is imminent. If the second leg M or W forms the